Hi Brian, thanks for
Hi,
joining.
Joe.
So my question is, what are the key things lenders look for when reviewing a loan application from a company, and what can we do to increase the chances of an application being approved?
That's a great question, Joe. And I, being an ex-bank manager, have always worked alongside an acronym, which is called Campari and ICE. And that acronym is as true today in this technological world with lots of different portals and platforms that lenders operate, is true today as it was 25, 30 years ago when it was first used. And every application I ever did within the bank, I always use that acronym, and I'll talk through it very, very shortly. And even today, when I'm building an application for somebody, even if it's a straightforward exercise of putting it onto a portal, I'll go through this process. So if you'd like me to go through what each of the letters under Campari and I stand for, I'll do that.
Yeah, no, that's good.
Okay. So the principles of lending money are the same whether you're lending somebody £1 or whether you are lending somebody £100 or £100,000. So if I were to ask you today, Joe, can you lend me £100? You would instinctively start going through your own due diligence process. Who am I? Who else do I owe money to? How do I know I'm going to be able to get that money back? And in the event of anything going wrong, what collateral have I got that you're able to offer me to safeguard my position? So the principles will always be the same. And we in layman's terms would say I'm sussing somebody out, but in business terms, it's called due diligence.
Yeah.
So let me run through Campari and ICE. C is character. So what I want to know about an applicant is, who are you? Who are you? Are you good for the money insofar as you've got a good payment record, track record with any other personal liabilities that you've had in the past or ongoing? Are you of sound standing, an honest individual, so on and so forth? And it's just getting a flavour of who the individual or individuals are within the entity that is looking to borrow the money.
Yeah.
Okay.
Yeah.
The next one, A, is ability. So what do you, the applicant, have to demonstrate that you have the ability to run a business? Have you had any businesses in the past which you've run? Have you operated in the sector as an employee, maybe not even owning a business, but you understand the sector that you're operating in? So if you want to go into the restaurant trade, for example, have you worked in a restaurant previously? In whatever capacity, you get a feel of what that industry is all about, what that sector is about. So ability is really, really important. But included within ability is obviously also the ability to understand numbers and to be able to provide monitoring information. So it could be your cash flow, whatever it might be. It just demonstrates that, you know what, actually you're on the ball here. You've got a good idea of what you're doing, what you're planning to do. And I believe that you will do it because you've got a track record. If you haven't necessarily got a track record, your character plus your ability with what you've done in the past just demonstrates actually you're a sounder bet than somebody that has never done anything at all.
Yeah.
Okay. The next one, M, is means. And what we talk about when it comes to means is what we're really now looking at is an individual's asset background. So we tend to carry out what are known as asset and liability studies. So please provide me with all of your assets and let me know what all your liabilities are. So people have property, people have cars, and then what debt have you got, so on and so forth. And also looking at an income and expenditure statement, both at a personal level and a business level. So what's coming in and what's going out. So the idea behind this is and in a sense it falls within ability as well, is can you manage money and can you manage it well? But also in the event of something going wrong, what else have you got behind you that you might be able to input into the business if you need to? And in a sense, you could argue COVID has been a great example of that, where, you know, not every business has taken out a bounce back loan or a CBILS loan. They put their own cash into it, and some have to do it out of necessity. Others have had to do because they just can't get the facilities that they require. So means is really, really important because it also demonstrates to a lender that there is potential recourse in the event of a default. So the skin in the game if you've got means. Okay.
Yeah.
So we've gone through the first three already. We've not even identified what the purpose of the loan is, which is the P. Because any loan has to be for legal purposes, be it buying a property, investing in stock, investing in staff, or the infrastructure of the business. So we always talk about P as being the purpose.
Yeah.
The second A is the amount. So how much is it that you are looking to borrow? And what we find a lot of the time is a lot of applicants always err on the side of caution and think, oh, I'll go for a lower amount because there's more chance of me getting that.
Yeah. Okay.
And that may be true in certain instances, but actually, if you've got the right ability, and you've been able to look at a cash flow forecast and see what a funding gap might be, or you know your market, you know how much you need to borrow, go for the actual amount. Tell the lender or the broker, such as myself, what the actual amount is. Okay?
Yeah.
So we've now got character, ability, means, purpose, and amount. So once we know the amount, what we can then do is then we can look at how can this be structured, what type of repayment structure are we going to have? Is it going to be on interest only? Or is it going to be capital and interest, i.e. the actual loan amount itself plus the interest? Is it going to be over 1 year? Is it going to be over 5 years? Will it be over 10 years? So we have to look at the best way to structure it. And it will differ depending upon the nature of the inquiry. But obviously you can't work out a proper repayment until you actually know what the interest rate is going to be.
Yeah.
An interest rate invariably is based upon risk. So we've gone through the Campari stage and we get to the I in this case, we've kind of assessed the risk here. We understand what the risk is. So we will attach an interest rate of X to that particular loan. The ICE part of it is really more the financial side for the lender, so, and the security side for the lender. So the I in that bit would be the insurance, which is essentially the security a lender may take. It could be personal guarantees, but it could be tangible security such as bricks and mortar, i.e. property. They will also look at the commission, which is essentially fees and income they're going to get from it. And then the final one is any extras as well. So extras could be, when you're taking out debt, you want to make sure that you've got the appropriate life cover in place in case anything happens. Or if you're taking out joint debt with another director, you might look at, director share protection. So all falls under this really, really simple acronym of Campari and ICE, which basically boils down to demonstrate that you're a good character, that you've got the ability to run a business, that you know your numbers, you understand your numbers, which allows you to arrive at a figure that you want to borrow. And then your numbers will determine whether you can repay it or not on the structure that we work on, and then on the interest. So the more information that an applicant provides, and the information I ask for is not to catch people out, the more information just makes it so much easier for us to actually get a successful submission over the line. I think the finance market is unnecessarily complicated because we use a lot of terminology that frightens people.
Yes.
We don't need to use that. But I would just, and I'll repeat it again because it is important, I would just encourage people to say, if you were going to lend money to a friend or a family member, whoever it might be, doesn't matter what the amount is, when you're going through that sussing out process or that due diligence process, what are the questions that you will be asking of that person you're going to lend the money to? Yeah. And hazarding a guess, it will all fall under Campari and ICE.
That's easy.
I've only got a glass of water at the moment. So
Are you sure?
Other than water at the moment. Is that okay, Joe?
Yeah, no, that's great. Thank you very much for that. Okay.
You're welcome, Joe.
Thank you.
Cheers.